Alrighty, I think it makes sense to get started. We're about just a minute over the hour. First and foremost, I want to thank everyone for attending today. My name is Ryan Tolson. I lead the commercial team when it comes to Esgian Offshore Wind. I see many names here that I recognize, but also a number that are new. So for those of you that do not know who SGN is, we're headquartered in Oslo, Norway. We are a market intelligence and data analysis company for the ocean industries. We operate in three primary segments. That's shipping, offshore rigs, and offshore wind. Obviously, for today's webinar, it is 100% offshore wind focused. Each month, we host a short and to the point webinar on a current and relevant topic. We do our best efforts to keep this to 19 minutes, and we do that on purpose. We want to provide the most value we can in a very short period of time without a huge time commitment from our attendees, and hopefully we can get a recurring and get as many attendees on to the webinar as possible. If you haven't already, I do encourage you to sign up for our newsletter. Follow us on LinkedIn. This is where you can get updates on all our future events. You will get our quarterly report in the newsletter. And then if you follow us on LinkedIn, we do post periodic updates on timely events that are happening in the offshore wind market. So I encourage all to sign up for LinkedIn, our newsletter, and so on. Within Esgian Offshore Wind, if you don't know, we have a market intelligence database. In this database, it in essence provides transparency and clarity to the global offshore wind market. You can see what's planned in the future by country, by developer. We have a complete list of all offshore wind farms globally. We're following tier 1 equipment contracts, vessel contracts. We have a factories database, a floating technology database, a vessel database, and so much more within our platform. Our clients tend to be developers, those within the supply chain, consultancies, financial organizations, and government organizations. And we're primarily helping our clients with business development, uncovering new opportunities, competitive and strategic analysis, and really just a general understanding of the overall market. Everything that you're going to hear today has been derived from our wind analytics platform. So that is the baseline for our discussion today. Our team of analysts gather the information and highlight the activity, and we will present that to you today. So today's discussion is primarily going to cover the activity from the previous quarter and touch on a few highlights that have already happened in Q1 of 2024. And with that being said, I'd like to hand it over to Kasper and Oliver, who will take it from here and lead the discussion going forward. Take it away, guys.
Perfect. Thank you very much, Ryan. And hi, everyone. Great to have so many of you on today's call, see so many names that we know very well. As Ryan mentioned, these quarterly update webinars that we run usually look at some of the highlights from the trailing last 3 months of the year. It's going to be a little different this week, as we're already coming clearly towards the end of February. The year's started quickly, if such a thing's possible. So this happened because in January's webinar, we chose to run through the top 10 predictions from our team of analysts for 2024 rather than do the quarterly. So the quarterly update got shifted 1 month out to February. Given where we are in the calendar, the intention is, yes, to look back at Q4, highlight some of the key trends there, but also understand a little bit about where those trends have continued in the year to date and bring things more generally up to date, covering as much recent events as possible in the update. The message for us then really for Q4 was that the optimism continued to ebb during that fourth quarter, during the end of the year, as the market was continuing to digest what was really fairly project-specific bad news in the UK and the US in particular that had tripped over and followed on from the third quarter of 2023. Notable for us, though, was the change in mood at the very, very end of the year, and that pessimism somewhat evaporated as a couple of projects in the UK were revitalized, arguably a bit surprising that all it takes is one or two pieces of good news for the whole market sentiment to fairly dramatically change. But that's certainly how it felt from our standpoint. We retain our view that this is a much needed reset for the offshore wind industry. It's certainly not an existential crisis. Our point of view is that we'll continue taking a measured view of the data. We're avoiding overwhelming pessimism, trying to avoid overwhelming optimism at the same time. And the data that we have in our platforms clearly shows continued growth in offshore wind, supported by continued decarbonisation efforts. So let's kick off. First, the 5 points that we're going to look at. And as usual, we'll set the scene by taking a deeper dive into the state of the project pipeline. Our project pipeline at the end of the year was somewhere around 572 gigawatts that we're tracking in the database. And that was a growth in the project pipeline quarter on quarter yet again. And you can see that on the chart on the left. And for us, that highlights the continued expectations that we see for long-term growth. Those long-term market dynamics continue to seem very positive. And that's despite a number of those shorter-term, should we call them wrinkles, that we saw in 2023. And there were clearly a number of issues in that year. But the long-term market dynamics continue to seem very positive. If we then switch to the shorter term, as the fourth quarter of 2023 closed out, we had just under 20 gigawatts of offshore wind power capacity that was under installation globally. It's pretty positive to see 3 fairly substantial projects in terms of capacity added becoming operational in Europe in that fourth quarter. Here we highlight Arcadis Ost in Germany, Seagreen in the UK, HKN in the Netherlands. So those ones came to COD in the quarter. A couple of other projects did come close, but slipped into 2024. Ishikari Bay in Japan slipped by 1 day and actually had COD on the 1st of January. But more sort of important in terms of absolute volumes of capacity. In Europe, we're looking at Saint-Brieuc in France and the Vesterhav projects in Denmark that are now finally pretty close to crossing the finishing line and becoming fully operational. So in terms of that short-term view that we look at on the right-hand chart here, there's plenty of positive news out there in the quarter. But, and it's an important but, it always pays to watch for signals of potential problems. And for example, one of the areas that we're looking quite closely at the moment and watching progress on pretty much a daily basis is Dogger Bank. And we continue to monitor those sorts of large-scale projects pretty closely to see if there are any developing issues with the development projects there. So let's take a look at the second chart on where we are with contracts and with lead times. Just to give you a quick reminder on this chart, what are we looking at here? Quick explanation. Chart here reflects lead times for some primary components on a wind farm. The lead time is defined to allow us this comparison across these different components. We define that lead time as the duration from the contract award date to the date of full COD on that wind farm. So in theory, if the market is getting tighter for these components, lead times should get longer and extend. And vice versa, if the market's getting softer, we expect lead times to be falling or dropping. Worth highlighting as well, each market is absolutely nuanced in its own right, subject to its own drivers. If you do want more detail on any of these, I'd encourage you to have a look at the quarterly report, which has got that more detailed explanation of what's going on. So with this high level view, I think the one to pull out really here is going to be on the turbines, which is the purple color. The last quarter of 2023 saw arguably what's now a traditional year-end rush for turbine contract awards. After a pretty slow 9 months or so, awards did come through in quite big volumes. 4 countries stood out. In Europe, it was in the UK and the Netherlands. In Asia, we saw good activity outside China, in South Korea and Japan in terms of awards for turbines. Beyond those countries, though, what was particularly interesting for us is the importance of major projects. And just a couple of major projects really dominated the number of turbine contract awards, and then how that flows through to other contract awards. And those big projects were the North Sea cluster in Germany for RWE, Iberdrola's East Anglia 3 in the UK, and also in the UK, the Norfolk projects that were Vattenfall and now clearly well and truly under RWE's control. And we'll come back to that in a later slide for the Norfolk projects. So contract awards returned for the turbine manufacturers, very welcome for them, no doubt. Partly, as I say, reflecting that traditional year-end rush, and certainly continuing to demonstrate the importance to the market of these very large-scale projects. However, worth pointing out, when we look at these charts for lead times, this continued reliance on just a select few large projects does really add to the lumpiness in demand for all types of components, and really means that you have to get into the detail behind these charts to really understand some of the key drivers that you can see. Okay, final one from me before I hand things over. If we look at transactions, this was the first time that we added a new section in our latest quarterly report on transaction activity, on M&A activity. This was firmly based on client requests that we've had. And as with any of the work that we do, but particularly on this area, we're always keen to hear feedback. So if you do have feedback on our coverage on this, we're very interested to hear what you think. Any additional areas that you'd like us to look at. So if we think about transactions, transactions themselves had strong traction in the final quarter of 2023. And even just the last few days, arguably even just today, that sort of traction has clearly continued into 2024. A lot of activity going on now. We've pulled out three key trends here. We could have pulled out more, but these are the three that we think are some of the more interesting ones. In terms of large early stage project portfolios switching hands, these tended to fall into two different camps. First camp here are these early stage portfolios, was more conceptual projects, really quite early in the process in countries like Sweden and Ireland. Here we're looking at companies like Statkraft and Inca, the parent company of IKEA, that were the respective acquirers, buyers of these early stage assets, often quite large positions, but still, as I say, very early in the process. But also worth pointing out here, companies like Ørsted continuing to sell down its positions, maintaining a 50 or 51% position usually. But these projects a bit further down the line, closer to completion, starting or well into that installation phase as well. So a whole range of different things going on here, but quite early stage processes, a lot of acreage and volumes changing hands here. Key trend for us in the end of 2024, the most notable single transaction I mentioned briefly early. And to us, this was largely responsible for this change that we had in sentiment at the very, very end of the year in December. And that was RWE taking ownership of the Norfolk portfolio in the UK from Vattenfall. Important for us because it really cements RWE's position in the UK, already a significant developer, now one of the largest in the country, really big position that RWE has in the UK. And more broadly for offshore wind in the UK, clearly signalling the view that previously halted Boreas project now looks like it might be able to be developed on a profitable basis, and certainly showing a bit of confidence now in upcoming CFD rounds and the changes that were made to those processes by the UK authorities. So generally, a stamp of approval on some of the changes that we've seen in the UK operating environment. If we turn to the first few weeks, first few months now of 2024, and as I mentioned, activity has continued to be strong. More recently, we've seen the news that Eversource has finally been able to confirm the buyer of its long-running attempt to divest its positions in the US. So joining Ørsted in South Fork and Revolution Wind, we've got Global Infrastructure Partners. This looks like it's going to be held outside GIP's Skyborn portfolio, which is the old WPD offshore business. Also worth noting here that Global Infrastructure Partners, which is a private equity firm, an infrastructure firm for private equity, is itself in the process of being acquired by BlackRock right now. Also in the US, we had Total Energies selling down its part of its positions in the two Attentive Energy phases on the East Coast to long-standing partner in many projects, Corio Generation. As a side note, not related to the US, Total Energy also entering some projects in Denmark with small local developer European Energy, and further agreement to work together in other Baltic markets. So Total selling down its positions in the US. Also on the East Coast in the US, we have BP and Equinor separating from their previous relationship, and as part of that, splitting up Beacon Wind and Empire Wind and going in their own directions. So if that wasn't enough, we had some news just before we came on for the webinar through earlier today. So Dominion Resources announced it's sold 50% of coastal Virginia for $3 billion to yet another infrastructure investor, this time Stonepeak in the US. So similar sort of trend to GIP entering the market there. It seems to be attractive for that type of investor right now. And also today, elsewhere, outside the US and outside these three main trends, but worth picking up, worth a mention, today's news that Shell's agreed to sell out of its floating position in the South Korean Munmu Baram project. Rumors have been circulating for a long time on this one, so it's not exactly a surprise to us. Partner Hexacom, which had 20%, will now become 100% owner of Munmu Baram. And the expectation is that this will have to be sold down somewhat for the project to now meaningfully progress. So that project likely on hold until we see more clarity on the eventual ownership of that one. So just today, lots of news happening, some other stuff coming out of Finland and Sweden overnight as well. So M&A really a big, strong trend in the marketplace right now. So having brought things up to date to today and to this afternoon, let me pass things over to Casper, and he can bring you up to date with what we're looking at in terms of vessel contracts.
Thank you. Moving on to the fourth point, installation vessels. Last quarter, all eyes were fixed on the impending merger between Eneti and Cadelier. The deal finally closed in December last year, bringing the two fleets under one Cadelier. The fleet now consists of 10 jackup vessels, making Cadelier the largest jackup fleet in offshore winds. Of the 10 vessels, 6 are new build vessels, either undergoing construction or are about to begin construction. Among new contracts last quarter, Van Oord will use Svan for the foundations for the Polish project Baltic Power and Nexus for cable installation in Taiwan. Van Oord also has recently been awarded the foundation installation work for the Polish offshore wind project Baltica 2, developed by Ørsted and PGE, also using Svan. Baltica 2 will, as mentioned, not be Svan's first Polish project, as the vessel will first work on Baltic Power and then switch over to Baltica 2. Having already been selected as a preferred supplier, Havfram signed a contract with RWE for turbine installation in December for the German North Sea wind cluster, which consists of 4 projects. And it's expected that Havfram will use one of its new builds for these projects. And new builds was also one of the other stories last quarter. Notably, Seaway 7 took delivery of its new jackup vessel Seaway Ventus from CMHI Jiangsu in China. The vessel is now in Europe after a longer stay in Singapore. The vessel is tasked with turbine installation for Gode Wind 3 and Borkum Riffgrund 3 in the German North Sea. And lastly, we return to the macro view and look at what we see in terms of new lease awards and allocation rounds for future projects. In Europe, it was a rather quiet Q4 for new project allocations, with only one new award in Estonia going to CIP and Ignitis. The UK did, however, last quarter update its rules for the CFD rounds, providing a much needed and much sought after increase in the subsidy levels. And as a result, we do expect high interest in the upcoming AR6. A slow Q4 is now being replaced with a very busy Q1, with Germany aiming to kick off rounds for a combined 8,000 megawatt this year, the Dutch offering 4,000, and the UK will soon be starting off a 4,500 megawatt floating round in the Celtic Sea. We have also seen a second award in Estonia, also going to CIP and Ignitis, bringing them up to 2 projects in the country, both with a COD expected post 2030. Norway is also aiming to host its first allocation round soon, with the 5 pre-qualified bidders now known, with the round itself set for mid-March. The round has been met with some lackluster response from developers, mostly due to low levels of subsidy and the potential of low profitability. Now over to the US. BOEM is laying the groundwork to host a number of leasing rounds in 2024, while Colombia took a big step last quarter towards becoming the first South American country to approve offshore wind project, launching their first site allocation round in December. And lastly, in Asia Pacific, Japan has announced the long-awaited results for the second offshore wind allocation round, where the Murakami project is the first to publicly propose using GE's 18 megawatt turbines. Offshore wind also continues to pick up pace in South Korea, with additional EBLs awarded, including 2 to Ørsted for a fixed project located off the northwest coast. And we do expect the results of the Gippsland rounds very soon in Australia, awarding licenses to developers for offshore wind for first time in the country. The Gippsland site has the potential for 10,000 megawatts, making it the largest allocation round set to take place in 2024, with the exception of awards going out in China. And with that, I give the word back to Oliver to round things up.
Thanks very much, Casper. That's our very quick look at our top 5 takeaways for the fourth quarter. We ran through a huge amount pretty quickly. There is, as always, more information available in that quarterly report. And if you want to pick up any of those ideas, themes, we're always happy to jump on a quick call and have a private discussion as well. Please do reach out to Ryan if you want a copy of the full report, or you can follow us on LinkedIn, as Ryan mentioned, to stay on top of regular market developments and analysis. Let me stop there and hand things back to you, Ryan, see if we've got any questions that have come through while we've been going through the slides.
Excellent. Casper and Oliver, thank you for an information-packed discussion or presentation. It was a lot of detail that was talked through in just over 20 minutes. We do try to keep these to 19 minutes, a minute or two over. I think that's okay. So thank you very much to the two of you. As Oliver had mentioned, this is the highlights, or these are the highlights from our full quarterly report. We can always give you a copy if you haven't received one already. Just reach out to me directly. You see my contact information there, and I'll make sure you have the most recent report. If you sign up for our newsletter, you will be getting all future quarterly reports sent to your inbox there. Also, all of the information that goes into our quarterly report and that is presented today has been brought to you through our wind analytics database. And if you would like a quick demonstration of the database, I'm more than happy to walk you through that and set up a time there. Also, Casper, Oliver, myself, and the rest of the team are available for one-on-one discussions if you have a question about today's discussion or would like to have a conversation around a certain offshore wind topic. We do make ourselves available. I do hope everyone found this very, very beneficial. We will host these every month, a timely and relevant offshore wind topic. We hope to see everyone next month. And from there, we'll break. Thanks again, everyone. Hope you enjoyed it. Take care.
Thank you. Cheers. Bye.